Hello and welcome. My name is Roger Conrad. I'm editor and publisher of Conrad's Utility Investor. We're here at the lovely corporate headquarters in Washington, D.C. You can see. We've been downstairs this morning going over your questions, and we would like to take a stab at answering them from this lovely rooftop venue. So without further ado, let's get after it. So our first question today is from Jeff from Indiana. Hi, Jeff. Jeff asks, what about the Federal Reserve raising interest rates? Won't that hurt utility stocks? And this is a question that we have explored in great detail. Obviously, there's a great fear out there that, in conventional wisdom, that rising interest rates hurt utility stocks. But actually, if you look at the last tightening period, which was from June 2004 to June 2006, when the Fed raised the Fed funds rate from 1% to 5.25%, pretty major tightening cycle. Utilities actually had a banner couple of years, up almost 60% over that period. So that was really the best two-year period for utilities. Now, what happened before the Fed started raising was a sell-off in utilities. We've seen that this time around. I think when the Fed actually starts raising rates, it's going to be very bullish for utilities. Okay, our next question comes from Samantha from San Diego via Twitter. And Samantha asks, is the adoption of solar power positive or negative for utilities? Certainly a lot of solar power adopted out your way, Samantha, and also in other parts of the country where a lot of people haven't really thought a lot about solar energy. But one thing that's really surprising, I think, to a lot of people is how utilities have really jumped on this and are using it as a profit driver. We look at every single utility stock in the U.S. in Conrad's Utility Investor every month. Obviously that involves going over a lot of earnings. So looking at the second quarter results, which is the most recent period, very bullish for solar power. Investing more in networks, also adopting rooftop solar power. Companies are starting to do that in a very big way, including a number out your way. So I think this is a very bullish sign for utilities. And in fact, probably the most bullish sign is that you see companies like SunPower and First Solar actually partnering with utilities to make money in this business, rather than in the case of Solar City, which, another kind of bombast on this issue that this is negative for utilities and they're taking sales away. It's actually the opposite is occurring. So solar is very bullish. Okay, so our next question is from Aaron from Seattle. And Aaron writes that he has made, which I'm very happy about, roughly 30% from a recommendation that I made that has been taken over. And he wants to know if there are any more merger and acquisition opportunities in the utility space going forward. And the good news, Aaron, is absolutely there are. And in fact, as you probably know, I've just written a report with 5 top picks. My top pick would be Northwestern Corporation. NWE is the symbol. And this is a Montana-based utility, very solid on its own. That's one of my criteria for picking these things. I want to make sure that we want to own it even if there's no deal. But I think this one would be very attractive to a number of potential suitors, one of which potentially Berkshire Hathaway, Warren Buffett's company. They've made a number of major utility acquisitions across the space, and this is a particularly solid little outfit. This is the kind of company that they like. Very solid, regulated utility with a lot of opportunity for investment, raising dividends, and so on. So look into that one, and again, thanks for your question. Okay, our next question is from Leah from McLean, Virginia. And Leah writes, you guys nailed the drop in oil prices. Thank you, Leah. But won't this affect the performance of your other dividend-paying stocks, particularly utilities, master limited partnerships, and so on? And the answer to that, Leah, is definitely oil prices are a catastrophic event for many companies. They're very much a catalytic effect for almost everything else in the industry. But we think the impact overall is going to be positive on the companies that we've been recommending. And of course, as you pointed out, we did have an inkling that this was going to happen to oil prices, so we've oriented our portfolios in that respect. Now, what we have seen is selling pretty much indiscriminately across the board of a number of stocks, almost anything to do with energy, including utilities. And this is to be expected in an age where exchange-traded funds are so prevalent and a lot of people just buy and sell sectors. But over time, we're going to see differentiation between the good and the bad in these sectors. And we're very comfortable that our recommendations are in the good group. best in class, and that we're going to see a nice pop in these things, certainly recovering their losses and then some. Okay, so our last question today comes from Mark from Atlanta, and Mark asks a really good question. Since we're well into the 7th year of an historic bull market, aren't you concerned that your recommendations may be running out of gas, and shouldn't we either hold off and wait for a pullback, or even sell many of these stocks? And you know, again, a very good question, and I think that's a question you should be asking about most of your portfolio. But over the past 6 to 9 months or so, we have seen a pretty good sell-off in a lot of the companies that we recommend. And if you go back to the earlier question about the Federal Reserve, that's really one of the major catalysts for the selling of dividend-paying stocks across the board. And if you, again, going back to that question, what the Fed did when it started raising rates the last time through, it proved to be a very positive catalyst for dividend-paying stocks. And we look for that to happen again. Now, valuations aren't very expensive for utilities anymore. In fact, price-to-earnings ratios are actually below the historical average for the past 25 years. So, again, things aren't expensive. We are seeing a lot of opportunity. And again, if this follows the pattern of previous cycles, we should see a really nice move in a lot of our stocks. So, no, we're not worried, and we see a big opportunity for buying. So that's the end of our questions for today. Thanks for tuning in. Thanks for submitting your questions via Facebook, email, and Twitter. And please subscribe to us on YouTube. We will be doing this on a regular basis. So if your questions didn't get answered this time, we will be giving you another opportunity to do so. Thanks again. Have a great day.